So there's a lot of headlines around the King's speech and a flurry of legislation. What that may do is only going to be evident over quite a long period of time, because it'll take quite a while for the policies to take effect, and some of these policies are challenging, and there's reasons why it hasn't been easy to do them before. But what it is doing, it's somewhat changing the tone about how the world looks at the UK. So when we've looked at the UK market and we've said, okay, well, it's a market of a number of sectors where the companies that are dominant are really global companies. So you can almost think of it as, okay, if I looked at the UK stock market and said, what if I compared those sectors in the UK to global sectors and just weighted an index by the UK sector mix? What would the valuation look like, and what does the valuation look like in the UK? Well, the UK is quite significantly discounted because of a number of factors, and some of those factors are gradually unwinding. So historically, one of those factors was the big unwind for UK defined benefit pension schemes, which had massive exposure to UK equities back in the 90s, and through various changes, some of them legislative, there's been a very significant continual perpetual selling down. That's one, and we're pretty much at the close to the end of that. And that's affected all companies, and therefore is one of the factors that has contributed to that discounting. The other is, I guess, the out of favour nature of some of the sectors that dominate the UK, which is financial services, energy, and some of the commodities, and that too, and at a time when technology has been triumphant and hasn't had much exposure to those things. Then, of course, you've had the question marks about the management of the UK economy and the politics which have impacted the pound, it's impacted the cost of debt through gilts, and all of those factors unwound. And then, of course, the final thing was Brexit. So Brexit created this degree of uncertainty. It worsened the terms of trade in which the UK relates to other parts of the world, and that made it more difficult. Also, the case for foreign direct investment in the UK as the gateway for selling what you do into Europe. So those things have somewhat dissipated in their effects, and actually now the irony is the UK looks more like a beacon of stability politically, and a lack of a shock factor, and then you've had the currency come down and the valuation of stocks such that actually you've got companies themselves are the biggest buyers. So buybacks are large. You've had foreign distressed investors come in and buy assets selectively, which are pretty good signs. So we think there are some catalysts there. We've seen the UK as a market that ranks highly in our process, and we've had more than usual in it. So for us, it's interesting to observe these changes, and it's less about what these policies that the governments are enacting will do, because the link between that and the fortunes of the companies that you're investing in is relatively modest.
Yes.
But it's more that tone and tenor.